markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
We're coming up to 10:22 on Wall Street. I'm Nathan Hager. You know about those gains I told you about in stocks last time we spoke? They're gone now. That's why we check the markets for you all day long here on Bloomberg. Right now, the S&P is little change. The Dow is down 51 points, or about 0.2%. The NASDAQ is back in the red, down about 0.1%, or 11 points. The buying in the bond space continues with the 10-year Treasury now up 25 seconds. The yield is down almost 10 basis points to 4.43%. Yield on the 2-year is at 4.82%. And the plunge in crude continues as well, with NYMEX down 3.9%. West Texas Intermediate sells for $73.65 per barrel. COMEX gold is up 1.2%, or $23.30, $19.8770 for an ounce of gold. The euro 1.0889 against the dollar. The yen is at 150.39. That's a Bloomberg Business Flash, and Bloomberg Markets continues with Paul Sweeney and Matt Miller.
All right, Nathan Hager, thank you so much. We appreciate it. Matt Miller, Paul Sweeney, live here in our Bloomberg Interactive Brokers studio. We're streaming live on YouTube as well. And Bloomberg is now in your dashboard with Apple CarPlay and Android Auto. It gives you access to every Bloomberg podcast, live audio feeds from Bloomberg Radio, print stories from Bloomberg News in audio form, and the latest headlines at the click of a button with Bloomberg News Now. How do you get it? Well, first of all, it's free with the latest version of the Bloomberg Business app. That's the Bloomberg Business app. Get it on your phone in the Apple App Store or on Google Play. Just download the app, connect your phone to your car, and get started. And it's all presented by our sponsor, Interactive Brokers. All right, let's do a little C-suite conversation here. Let's talk healthcare, biotech, cancer. Helen Sabzaveri joins us. She is the CEO of Precigen. Precigen is a publicly traded company. It lists on NASDAQ. PGEN is the symbol for, type into your Bloomberg terminal. Helen, thanks so much for joining us here. Talk to us about Precigen. What do you guys do? Where is your focus right now?
So we have been focusing on a cell and gene therapy and really bringing it to the next level. I think what we know that this is going to be the cutting edge for the next decades, and it is working for treatments limited in a hematological oncology setting.
Okay, so we're talking cancer here.
Yes,
okay.
Cancer setting. And however, the problems are basically the access to the patient, the cost that it's relevant, $500,000 tag prices for the treatments, and you can only get it once. Precigen is bringing it to the next level. What we are doing is manufacturing overnight at the fraction of the cost, done at the hospital, so you don't need centralized manufacturing.
So you make it at the hospital?
At the hospital.
Okay.
And accessible to the patient, and they can receive repeated doses because the cost is so much lower, and it can be produced overnight. And it's precise to the patient because we use their own cells to modify them overnight and infuse them back to the patient. So this is why we say we are bringing the therapy to the next level.
How much better are my chances now of surviving if I get cancer today, say, versus 10 or 20 years ago?
Definitely, the field has been coming along in various immunological therapies, and now with the cell and gene therapy. So the chances of survival is much higher. The percentages still is not up where we need to be. When we look at our therapies, we are in 20-30% response rates. We need to do much better than that. And this is one of the aspects that, for instance, even the cell and gene therapy right now in the field of cancer, for the liquid cancers, they do well in some of them, but they have not had any effects on solid tumors. And this is where we come in as well, because now our technology can address both sides overnight with the much lower price tag for the patient and specific to the patient cancer. And I think that's very important because then you avoid treatments that you know it will not work.
I'm going to ask an ignorant question. So pretend I'm a complete moron. Are you there?
You're not.
Why haven't we cured this disease yet? I mean, we've been throwing hundreds of millions. I mean, our boss throws billions of dollars at this disease for decades.
Yeah.
And there are a lot of people out there, probably not medical professionals, but people who think, you know what, this disease is simply too profitable to the healthcare industry to actually cure.
I think the issues with the cancer is multifaceted, and the mechanism of escape of your own cells from your own army, which is your immune cells, is very complex. And the reason that over the years, you see, we have moved the bar from chemo to now immunological immunotherapies, and now to your own cells recognizing it. And this is exactly what we do. We are bringing out your own cells and train your army back, and we reinfuse it back to you, so now they can recognize the enemy from within, which is your tumor cells. And I think that's where the difference is. And what we have to do is obviously make this much more accessible to the patient very rapidly, because the patients don't have enough time, and the current cell and gene therapies will not address that. And also treat a much larger patient population, which is the Precigen platform with the Ultra CAR T does that overnight at the hospital.
So where are you in the development of your company, Precigen? I mean, are you guys, do you have your product or your pharmaceutical in the marketplace yet?
So what we have is our Ultra CAR is already in the clinical trials across the United States, and we have been reporting not only the safety but efficacy. For instance, in AML patients, that they don't have more than a few months to live, and we have shown complete and partial responses in these patients, in ovarian cancer as well as triple-negative breast cancers that we are moving. But also, Precigen is not just the Ultra CAR company. We have other gene therapies, modalities that addresses the HPV cancers. And actually, we are really excited because the 2024 is going to be a breakout for Precigen, as we are bringing the first drug for a recurrent respiratory papillomatosis, which are the benign tumors in the trachea and throat of the patients. And the FDA has given us the accelerated approval, and we are moving toward the commercialization by 2024, which now changes the paradigm for our patients and for our investors.
I mean, I'm just looking at your stock. It's down 33% this year. I have no idea why. It's got a market cap of $250 million.
It traded at $65 a share in 2015, which was admittedly years before you came into the company, but it's trading for $1 now.
It was a different company, and I think what we have done is since 2020 that I have become the CEO, we have changed the company and focused mainly on health. And in 3 years, we have moved the platform from a discovery to the scaling up and to the commercial. And we just received not only the breakthrough designations from FDA, but accelerated approval. And the company by next year is moving toward the first commercialization of the drug in the HPV field, which, as you can imagine, it's a huge field in cancer as well as in infectious diseases.
So are we ever going to get to a point where there will be treatments that will be better than chemo?
Oh, absolutely. We are moving in that direction. And the cell and gene therapy is exactly that. What we are doing currently at Precigen is really taking your own cells, immune cells, and modifying them and returning them back to you. So the safety is much more favorable. The toxicity is much less, because it's not chemo that kills across. This is designed to only kill the tumor cells and nothing else. And I think this is why Precigen is bringing the field of cell and gene therapy to the next level.
Who else is doing this? Like, who else is doing kind of what you do?
There are a number of companies that they are doing the classical CAR-Ts, but this is exactly...
CAR is C-A-R-T.
Yes.
CAR-T.
CAR-T.
And what is that?
It's a chimeric antigen receptor T cells. These are modified T cells. However, the way it's done in a classical fashion with the centralized manufacturing, which takes almost between a month to 2 months. The cost of these CAR-Ts are close to $450,000 to $500,000. What we have done is do that in the completely differentiated way than everyone else. And the Precigen is the only company that has this technology currently. And we do that at the clean room of a hospital without expense.
All right, so all I know about biotech is it's a binary. It either works and its stock goes up through the roof, or it doesn't and it goes to zero. What's the milepost for your company for that?
So
conclusion?
in the very near future, in 2024, we are moving our first adenovirus, gorilla adenovirus platform in an RRP patient, rare disease patient, which FDA has given us the BLA, and we will be commercializing this. So that would be the first, and that's why I think we have a great opportunity and very exciting year in 2024. And to your point, the stocks definitely has been under pressure. All stocks have been, including Precigen. However, we are confident that 2024, with the new drug that we are bringing forward, and already with the accelerated approval from FDA, we are going to bring value to our patients as well as to our
fascinating
investors.
story as always. I mean, so many fronts on this fight against cancer. Helen Sabzaveri, CEO, Precigen is the company. It is PGEN is the ticker, with some new techniques and new therapeutics.
CAR T.
CAR T.
We're learning something.
We're learning something.
And the adenovirus platform, which addresses both oncology in HPV cancers and infectious diseases.
With our news in New York City, here's Michael Barr.
Thank you very much, Paul and Matt. The presidents of the U.S. and China say they reached a number of agreements in an effort to mend relationships. Bloomberg's Ed Baxter reports they met on the sidelines of the APEC summit in San Francisco.
As well as fentanyl, high on President Biden's list is opening communication between the country's militaries.
We're reassuming military-to-military contacts, direct contacts. As a lot of you press know who follow this, that's been cut off, and it's been very worrisome. That's how accidents happen.
Biden also saying the two agreed on finding ways to control AI. Biden also says he was assured that China has no plan to invade Taiwan. Now, Xi did say that he told Biden that the U.S. should not have plans to suppress China and also ask for sanctions to be removed. In San Francisco, I'm Ed Baxter, Bloomberg Radio.
However, after the meeting, there's backlash from China after President Biden again called Xi a dictator. The Senate late last night passed the House-approved continued spending bill that avoids a government shutdown, at least until after the new year. Senate Majority Leader Chuck Schumer.
Because of bipartisan cooperation, we're keeping the government open without any poison pills or harmful cuts to vital programs. A great outcome for the American people.
The bill leaves out aid to allies, Ukraine and Israel. There's word Israel is considering a temporary ceasefire and possibly freeing some Hamas prisoners to secure the release of some hostages from Gaza. In Washington, D.C., police and protesters clashed outside the Democratic National Committee headquarters during a demonstration for a ceasefire in the war between Israel and Hamas. Democratic representatives and candidates were inside the building for a campaign reception when it was interrupted by chanting outside. Global news 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
$10:40 on Wall Street. I'm Nathan Hager. Stocks are struggling. Treasury yields are tumbling after the latest data on the economy. We saw weekly jobless claims rise to 231,000 last week. Continuing claims hit their highest level in nearly 2 years. Morgan Stanley chief U.S. economist Ellen Zentner says the labor market is getting closer to normal.
We're seeing not just claims rising a bit here, but I focus on continuing claims. People that have been losing their jobs are staying unemployed for a bit longer, and that's been rising since October. So it's getting more difficult to just get reemployed right away. This is the kind of softness in the labor market that we have needed. And of course, it takes pressure off the Fed to raise rates. Again, right, going on extended hold.
And you can hear more from Ellen Zentner of Morgan Stanley on the Bloomberg Surveillance podcast. We check the markets all day long on Bloomberg. The S&P right now is down 3 points, or almost 0.1%. The Dow is down 86 points, or 0.25%. The Nasdaq's about 0.25% lower as well, down 35 points. The 10-year Treasury is up 23 seconds, yield 4.43%. The yield on the 2-year, 4.82%. 6 of the 11 main industry groups on the S&P 500 are in the green right now, but the biggest drag is energy, down 2.1%. NYMEX crude is lower by 3.5% right now at $73.94 per barrel. COMEX gold is up 1.2% at $1987.70 per ounce. The euro is at 1.0880 against the dollar. The yen is at 150.47. Traders also looking at earnings. We're watching shares of Macy's. They're higher by about 6% after a third quarter profit beat. Walmart is down 7.5%. Earnings came in about in line with estimates, but Walmart's CFO says they're more cautious on the consumer than they were 90 days ago. That's a Bloomberg Business Flash. Bloomberg Markets continues with Paul Sweeney and Matt Miller.
All right, Nathan Hager, thank you so much. We appreciate that. Matt Miller, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. So head over to youtube.com and search Bloomberg Radio. What to make of this market? You know, we're up like, I don't know, a little more than 9% off of that late October low. So it's been a pretty good couple of weeks here. Question is for a lot of folks, have we seen peak rates? Is the all clear sign there from the Fed? I don't know. But maybe our next guest has an opinion. Nimrit Kang joins us. She is co-CIO, Senior Portfolio Manager at North Star Asset Management. So, Nimrit, I mean, it's been an interesting few weeks here. People seem to be saying, hey, I think the worst might be behind us. How are you guys looking at these markets?
Matt, the only thing we feel confident about is the increased level of uncertainty and volatility in the markets. Just, end of October, we were looking at the 10-year at 5%. It's already down to 4.5% just on a moderate CPI print and cooling job market and good retail sales data. So for us, that really translates into, just being very focused on managing risk in the portfolios.
So you think this kind of volatility is here to stay? I mean, it's been amazing to watch these, on some days, 20 basis point swings. Seems insane for what I thought was one of the most liquid markets in the world.
Right. And not just recently, you just, look at last several years since the pandemic started. We went down for the interest rates cut all the way to zero, then stayed there, now upward climb of almost 525 basis points from March 22. That level of volatility, yes, we think that increasingly we're contending with an environment where there's more and more uncertainty. And the reason we say that is not only are we in a different regime for the monetary cycle after 40 years of one way declining interest rates, we're now at the other side of that, but we're also dealing with increased level of political and social polarization. What does that mean for increasing the ballooning deficit for the US government, so forth. And, just overall, all these factors, and not to mention that one of the big lessons we learned during the pandemic was the fragility of the global supply chains and the pressures we have from just reaching ecological limits and tipping points, so forth. All those things over the medium to long term, we just think volatility and uncertainty is the only thing we can be really certain about.
So where do you guys see opportunities here? If you take maybe a little bit of a longer term view here, are there any themes or trends that you guys think are attractive?
Right. For the fixed income portfolio, one of the ways that we're thinking about the opportunities and also really thinking about managing risk is we want to diversify across the duration spectrum. So we're laddering in bond portfolios, building those bond ladders in for the client portfolio so that we can capitalize on capturing that 5 to 6% yield, but still get that diversification and maintain flexibility, right? On the equity side, we're really focused on continuing to own very high quality companies with very low financial leverage, which have business models that we believe are providing those products and solutions that you are going to need over the next 5-10 years. And, you know, I have a couple of examples that I'm happy to get into if you would like.
Yeah, let's hear it.
All right. So, you know, one of the things that we talk a lot about is this long-term secular trend of aging demographics. You know, 1 in 6 Americans over the age of 65, and this cohort is going to grow by 35% by just 2030. So as Americans are aging, and that's not just true for the US, it's true also for much of the developed world, Asia, Europe, other parts, seniors are aging, so they're going to need, you know, they still want to live very active and healthy lifestyles. So for us, that translates into investing in companies like Stryker, which is a leader in knee and hip implants and replacements, because you're going to continue to have demand for those. We also like companies like Danaher. This is a leader in molecular and diagnostic testing. Their products were widely used during the COVID pandemic for the PCR testing, but overall, longer term, we see more and more trends towards the precision medicine and discovery of new molecules and biologics for new drugs. So those are some of the areas, but we think there's plenty of opportunities for these high quality compounders where they've been caught up in this short-term cyclical headwinds, or where we're, you know, just the macro narrative, but longer term, we see continued demand for the products that they're providing.
How do you feel about the consumer in general? We just had Walmart report results and really a cautious outlook from the company here, suggesting that, you know, maybe on the margin, the consumer's getting a little pressed here.
The consumer, we fully expect, will moderate. There's just, you know, the interest rates went from 0, where you had no cost of money, to now actually having a normalized cost of capital. So from that perspective, absolutely, we fully expect that the consumer is going to continue to feel the strain of a different regime. And, you know, if the student, there's so many different pressures that are coming into place for the consumer. So we continue to see that. But one thing that we think has been continuously been underestimated by the market is this whole impact of the boomer population. You know, I read something that the boomer population, the retired boomers, the net worth is 75 trillion. And that is a significant pool of money that's available and that's being put back into economy. Even if you look at the job data that comes out every month, the jobs are being created in sectors that are important for the services for providing this aging population, financial services, healthcare, those types of things, travel related. So, you know, there are spectrums of consumer that will continue to feel that squeeze, but we think there's a big pool of consumers who are actually benefiting from getting higher yield on their money market deposits and other savings that they've accumulated for years.
Good stuff. Nimrit Kang, thank you so much for joining us. Really appreciate it. Nimrit Kang, she is co-CIO and Senior Portfolio Manager at North Star asset management. So you're calling out the baby boomers, man, of which I am a boomer by
barely.
Barely, a couple months, like December 63. But I'm in there, baby.
I was going to say,
growth market.
If it weren't for you, the assets would be smaller.
Exactly. We are a growth market. Watch out for the boomers out there. S&P 500 pretty much unchanged on the day. We'll have more coming up. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
You got it, Paul. Today is Red Cup Day at Starbucks. You know, when the coffee chain gives out their popular reusable red cups to those who order holiday drinks. But customers may need to pack some patience when they head to their local cafe. Bloomberg's Gina Cervetti explains why.
It's also the day that unionized Starbucks workers plan to hold their biggest strike yet, accusing the coffee giant of refusing to fairly negotiate at cafes that voted to organize. Starbucks has said it's the union that refuses to negotiate fairly. Thousands of employees at hundreds of sites plan to hold one-day work stoppages today.
Starbucks up about 1%. It now appears that General Motors' contract with the United Auto Workers will be ratified. Bloomberg's Steve Podisk has those details.
A big win for the deal at a Texas pickup truck factory looks to have pushed it over the top despite the pact falling short at other GM plants. Rank and file votes yet to be counted come from smaller facilities. GM and UAW negotiators, about 54% of voting workers have approved the deal.
We have GM right now down about 0.5%, and checking in with the remainder of the big three. Stellantis down 1%, and we have General Ford right now down as well. Meanwhile, nearly 4,000 members of the UAW have approved a 5-year contract with Volvo Group's Mack Trucks unit. Now, this ends a 39-day strike at the commercial truck makers' plants in Pennsylvania, Maryland, and Florida. That deal, it includes a 19% pay raise over the life of the contract, starting with a 10% increase in that first year. Those are the company stories we're following this hour. I'm Lisa Mateo. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, Matt Miller, Paul Sweeney, live here in the Bloomberg Interactive Broker Studio in New York City. Looking at the markets here, S&P off about 0.2%, NASDAQ off about 0.3%. The Russell giving up 1.7%. It had been rallying pretty substantially over the last several days. The small cappers still giving some back here. I'm calling out oil. WTI crude oil off 3.8%, $73.75 a barrel. Man, and you think about two hot wars out there, you just would think oil might go up, but it is coming down. So we'll keep an eye on that. 10-year Treasury yields 4.45%. It's off 8 basis points. With our news in New York City, here's Michael Barr.
Thank you. Very breaking news right now. The House Ethics Committee, in a report released today, said that there is clear evidence that New York Representative George Santos committed serious crimes, though it stopped short of recommending formal sanctions, as some had hoped. And according to Semaphore, there's word that Santos might not run for re-election. Of course, we'll be following this story all day. President Biden says his summit meeting with Chinese President Xi Jinping was some of the most constructive and productive discussions we've had. Both leaders agreed to resume military-to-military communications. Speaking to reporters in Jakarta, Indonesia, following a meeting of the Association of Southeast Asian Nations, U.S. Defense Secretary Lloyd Austin said he'd welcome the renewed military dialogue.
I'm encouraged by the fact that that we will have channels open, but again, I won't make any predictions about what this means for China's behavior. We would hope that they would begin to dial that back.
Israeli Defense Forces say they have taken control of several buildings in the Al-Shifa hospital complex in Gaza. The IDF calling the raid a carefully targeted and aimed at dismantling Hamas infrastructure. At a press conference in San Francisco, President Biden supported Israeli claims that Hamas was using the hospital as cover for an underground tunnel network.
One thing has been established is that Hamas does have headquarters, weapons, materiel below this hospital, and I suspect others.
The U.S. Senate overwhelmingly approved a temporary funding measure to avert a government shutdown. New York City will hold off on hiring new police officers, reduce trash pickups, and slash spending on services for migrants in an effort to cut 5% from the city's $107 billion budget. Earlier this week, Mayor Eric Adams described the cuts as painful. And there's word the Oakland Athletics move to Las Vegas was unanimously approved by Major League Baseball team owners, cementing the sport's first relocation since 2005. It comes after an inability to gain government assistance for a new ballpark in the Bay Area. Global news 24 hours a day, whenever you want it, with the Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Paul Matt.
Hey, Michael Barr, thank you so much. We appreciate that. Coming up in the next hour, Brian Stelter, special correspondent for Vanity Fair, former CNN correspondent and producer of Apple TV's The Morning Show. He's going to come on and he's going to discuss his book entitled Network of Lies. So that's coming up and just after the top of the hour. Matt, I thought of you when I saw this story. Like many shoppers, New York's Sarah Henry is accustomed to retailers locking up products to thwart thieves. But when she saw Manhattan CVS had put Oreos behind glass, she took a photo to document the insanity. Quote, "It's just crazy. Everything is locked up. You can't even get Oreos without ringing a bell, let alone cleaning supplies." So to sidestep the hassle, you know what she does? Henry has taken to ordering groceries and medication online from Stop and Shop Supermarket and Amazon.com.
Yeah, I totally get it. You know, I went into, what's the one up the road on
Walgreens?
Lex? Is it Walgreens?
I think so.
I went in there to get a toothbrush a couple weeks ago, and not only is it locked up, like I'm going to steal a toothbrush, but even when you ring the bell, it takes forever. I'm ringing the bell on the toothbrush side. There's a lady behind me, like ringing the bell for the Tylenol, and we're just like looking at each other and just ringing the bells, you know?
And that is a recent thing. I mean, pandemic kind of thing. And
It just makes you not want to shop in there.
Exactly.
Feels like I'm in the wrong neighborhood.
And so this story, you know, Jessica Nix, Bloomberg News, the reporter, she's saying people are just going online for this stuff. I mean, why deal with the hassle? And sure enough, we're seeing that in the market share change. So, you know, you got to pay attention to that stuff. We'll have more coming up. This is Bloomberg.
I'm going to order some stuff.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Brian Stelter, special correspondent for Vanity Fair, former CNN correspondent and producer of Apple TV's The Morning Show, which I love. Great show. Just had the series finale, which was awesome. He's got a book out, Network of Lies, so we're going to talk about that. David Kudla, founder, CEO, and chief investment strategist at Mainstay Capital. He's going to join us and give us his market call. And then it is Thursday, and that means we check in with Barry Ritholtz, founder and Ritholtz Wealth Management, host of Masters in Business. I have no idea what we're going to talk about with him, but it may involve cars. I'm just going to warn you at this point. All right, let's kick in with Nathan Hager right now and get a Bloomberg Business Flash.
Sounds good, Paul. We're watching the markets. Stocks are falling. Treasury yields are tumbling. Look at the price of oil, now down more than 4%. Latest economic data showing some signs of weakness in the economy, higher than expected. Weekly jobless claims. Investors are also waiting through the latest corporate earnings. We're watching shares of Macy's move higher after a profit beat, but Walmart is down more than nearly 7.5% now. Those earnings came in about in line with estimates, but the CFO says they're more cautious on the consumer than they were 90 days ago. Chuck Grom, senior retail analyst at Gordon Haskett, though, says he has never been more bullish on the world's biggest brick-and-mortar retailer in the long term.
If you really dig underneath the covers here, it's really less about the top line and less about the back half of October commentary that the CFO recently made. I think it's more about the margin flow through. That was disappointing. The U.S. margins were disappointing. So when you have a stock at an all-time high at very rich valuations and you get a little bit of a disconnect, then it could be difficult for the stock.
And hear more from Chuck Grom of Gordon Haskett on the Bloomberg Surveillance Podcast. Again, those Walmart shares down 7.4%. As for the broader market, the S&P 500 is down 0.2% or 7 points. 44.95 is the S&P level. Dow Jones Industrial Average down 90 points, trading at 34,900. The NASDAQ is lower by 46 points. 14,057 is the level on the NASDAQ. 10-year Treasury's up 22 seconds for a yield of 4.44%. 2-year yield 4.83%. NYMEX crude down 4%, as I said, down to $73.56 per barrel. COMEX gold is up 1.2%, now trading at $19.8740 per ounce. The euro 1.0879 against the dollar. The yen is at 150.38. That's a Bloomberg Business Flash. Bloomberg Markets continues with Paul Sweeney and Matt Miller.
All right, Nathan Hager, thank you so much. We appreciate that. Matt Miller, Paul Sweeney, we are live here in the Bloomberg Interactive Broker Studio, streaming live on YouTube. And we're also doing some stuff on Apple CarPlay and Android.
So cool that our app is now available in your car's dashboard. You know, until now, it was just it was like Google Maps and Waze and those kind of navigation things. But now you can get the Bloomberg Business app, in your dashboard.
With Apple CarPlay and Android Auto, it gives you access to every Bloomberg podcast, live audio feeds from Bloomberg Radio, print stories from Bloomberg News in audio form, and the latest headlines at the click of a button with Bloomberg News Now. How do you get it? Well, the good news, first of all, is it's free. The latest version of the Bloomberg Business app, that's the Bloomberg Business app. Get it on your phone in the Apple App Store or on Google Play. Just download the app, connect your phone to your car, and get started. It's all presented by our sponsor, Interactive Brokers. So good stuff there. We're all over the multimedia stuff. As is our next guest, Jess Menn. She covers all the markets for Bloomberg News. She writes print. She's got...
Dude, I'm looking on the Bloomberg Business Media app.
Yeah, how's it going?
And I click on the audio tab under media, and I see like live Bloomberg Markets 11:02 Jess Menton 11:08.
This is so
Brian
exciting.
Stelter.
I love this.
Exactly. Your name in print.
Hooray.
Things are going to start happening to you now.
I'm going places.
Exactly. Jess, what do you got going in these markets here?
Well, if you look at the S&P 500 trading right below 4,500, and when you look underneath the hood for the industry groups, the energy sector down more than 2% today. That's what's sort of weighing when you are seeing it pulled a little bit lower there. Then utilities is the best gainer, up about 0.7%. But I have to put in perspective, I mean, the S&P 500 is closed higher in 11 of, actually today, if it holds those losses, though, it'd be higher in 11 of the past 14 sessions. Also, if you look month to date, the S&P 500 is up over 7%. So it's on pace for its best month since October of last year. So quite the rally so far through just halfway through this month. If you look also at some of the names here, Macy's, ticker symbol M. If you look at that stock today, up about over 7%. So on pace for its best day. Actually, not since that long ago, since November 14th. So when you look there, its stock definitely had an earnings beat thanks to better inventory. So we know that that's another company in addition to Target that had to deal with that, especially in the aftermath of COVID. Though it did say same-store sales did fall for a third straight quarter, but inventories were down about 6% in the quarter from a year ago. But also, if you look over the past 3 trading sessions, Macy's is up over 26%. So that's its best 3-day span since May of 2022. So there was a strong 2-day rally even coming into today. But of course, if you look over at its peer Walmart, ticker symbol WMT, that stock is down over 7% today. So if it holds those losses, on pace for its worst day since July of 2022 there. So we know we've talked a lot about the world's largest retailer this morning. So it did have a cautious tone on the U.S. shoppers, even though it did actually modestly raise its adjusted profit forecast for this fiscal year. So its CFO, John David Rainey, did say that there was a sharp fall off if you're actually looking at some of the sales toward the end of October on particularly some of those discretionary items. But he did note that he felt like a lot of customers were potentially waiting on some of those promotionals for holidays there. So they still saw some optimism. But when you look at Walmart, its stock was already up about 20% year to date coming into today, whereas when you looked at Macy's coming into today, that stock was down about 37%. So a little bit of a different story there when you're looking at both of those. But we do have Ross Stores that's actually reporting after the bell today. And then next week, we'll have Best Buy, Nordstrom, Lowe's, Dick's Sporting Goods is another. And in addition to, of course, NVIDIA is reporting next Tuesday on the 21st.
One of these things is not like the others.
Right.
You just went through a huge list of retailers and then tacked on an AI chip maker at the end.
Well, I had to throw in, don't forget NVIDIA next Tuesday.
But so the retailers just wait until the very end of earnings season?
Well, the majority of them start, they're a little bit off calendar compared to the other ones. So they're always toward kind of the tail end.
Back in the day before they were computerized to really, literally, to tally up all the sales.
Yeah.
It took a while. So
and they only got in the black on the Friday after Thanksgiving.
Right, exactly.
But now Black Friday could be any day.
I know. And so then you have NVIDIA, the last of the big 7 that'll be reporting next week.
All right, very good. We appreciate that. Jess Menton, she covers all the markets for Bloomberg News. Our next guest is thrilled here to have with us. He'll be coming up in just a second here. But looking at the markets, I don't know, Matt. I mean, we rallied, kind of 8-9% off of the low here just in late October.
Yeah.
I mean, I guess it kind of feels like you've seen peak rates, I guess. I think that's kind of what the market might be telling us.
That's what it looks like to me. You had rates October 19th, right? You had the 10-year go up through 5%.
Yep.
And those were some scary times for the equity indexes. But now that we're looking at a 10-year with a 4.4 handle, it's a lot easier to make a rally.
Yep, exactly right. Let's bring in our next guest, Brian Stelter, special correspondent for Vanity Fair. You know him from CNN. He was a longtime correspondent there at CNN. Producer of one of my favorite TV shows, which I just finished, The Morning Show. That's based upon his book. He's got a
Top of the Morning,
right? He's got a new book out. This guy's prolific. Network of Lies: The Epic Saga of Fox News, Donald Trump, and the Battle for American Democracy. Brian Stelter joins us. Hey, Brian, thanks so much for taking the time to join us here. Kind of, what did you learn in your reporting for your new book here? This is territory that you're familiar with.
I had to write it because the last time I wrote a book about Fox, it was mostly anonymously sourced. And you all know that's how it has to be sometimes. Some sources insist on confidentiality. They won't go on the record. But then 3 years later, when Dominion was suing Fox News and Dominion was able to obtain all of those emails and text messages from inside Fox, I felt like all of my anonymous sources were now speaking on the record. Of course, it wasn't their choice. They were forced onto the record through the legal process, through the document discovery process. But there were so many revealing messages, including emails with Rupert Murdoch, that I thought, hey, someone's got to turn this into a book.
So what's your take on where Fox News goes now? I mean, post Tucker Carlson, ahead of a new election season, they've got a new CEO. There's so many changes that have happened in the last, year, 6 months to a year. What happens to Fox?
That's right. We talked after Tucker Carlson was ousted on the air. Then Rupert Murdoch deciding to step aside. It actually takes effect this week. Yesterday at News Corp, tomorrow at Fox Corp, he becomes chairman emeritus. And he's really elevating his son Lachlan, making it even more clear that Lachlan is the future of these companies. What's the future of Fox? Well, in the book, I quoted an insider saying Lachlan just wants to minimize headaches and maximize profits. I think that's what we see in the Tucker Carlson firing. He wants to minimize those headaches, and then he wants to try to figure out how to make as much as he can out of these declining cable businesses while also investing in Tubi and in Fox Nation and other streaming ventures. Of course, Fox is one of these subscale media players. It's not nothing like Netflix or Disney. So I think, in the future, anything could happen. I think the most likely scenario is we're going to see another attempt to recombine News Corp and Fox Corp, but maybe not for another year or so.
So, Brian, what's in some of this? What are some of the new issues that you kind of unfounded or founded here in this new book?
Yeah, what I get at is Rupert and Lachlan Murdoch's role within this company and this network, Fox News, that is the dominant player within the Republican Party. And what I found is that the times when Rupert and Lachlan should have stepped in and been more involved, they weren't. They were laid back. They were kind of letting others do the dirty work. Remember in Succession when Lucas Matson says he's hiring a pain sponge? Well, I came to realize that's what the Murdochs really do in real life. No wonder the show was so heavily reliant on the Murdoch story. They have their own pain sponges, to clean up the messes. And so that I found was interesting when reading these emails and text messages, that they keep their, they have plausible deniability sometimes with some of these scandals and lawsuits. And of course, these lawsuits are ongoing. We know Dominion settled, but Smartmatic, another voting company, is suing Fox. There are a lot of shareholder lawsuits and other defamation lawsuits. It's really remarkable that here we are talking at the end of 2023, and there's still so much litigation about the last presidential election.
What do you think about, we've recently heard that Donald Trump was dead set against leaving the White House. And, more and more is coming to light, but it continues to shock me that he has such a strong hold on, a place like Fox or the U.S. Congress. How does he continue to have that kind of strength?
I think it has a lot to do with the rewriting of January 6th. And I discovered this as I read through all these emails and texts, that after January 6th, Rupert Murdoch said very clearly, we're going to make Trump a non-person. We are pivoting away from Trump. He was told by his number two that Sean Hannity is ready to lead the 75 million Trump voters away from Trump. So clearly there was an attempt to make Trump a non-person. But it didn't last. It didn't last. So why didn't it last? Why was Trump able to get back to center stage? Why was he replatformed? Well, I argue it's because people like Tucker Carlson rewrote the story of January 6th to say it wasn't an insurrection, it wasn't a riot, it was just a tourist visit gone bad, that it actually wasn't that big a deal, that, hey, maybe the feds were involved, maybe the government plants were in the crowd ginning up the protesters. Basically, by presenting a conspiracy theory version of January 6th, I think it helped to absolve Trump in the minds of his fans, to absolve Trump in the minds of Fox's viewers, and thus, now here we are, Trump's still the dominant figure in the primary.
Brian, what role do you expect Fox News to play in this upcoming presidential election vis-a-vis the former President Trump, who presumably is the Republican nominee?
Well, look, the first two GOP debates of the season both went to Fox. Now there's going to be a few more debates, but without Trump, they're becoming less and less important. Trump is in a little bit of a standoff with Fox. He thinks he's more powerful than Fox. They go back and forth because, they're like It's like, I don't know if it's a buddy comedy or it's a horror movie, but it's a situation where they're kind of both battling each other at all times. But at the end of the day, what matters most is that the audience comes home and Trump comes home. He will come home to Fox because they have the same interest. They want to see Democrats defeated. So even though there's lots of talk about Trump trashing Rupert Murdoch, complaining about Fox, I don't think that'll matter in a general election. I think what'll matter is that Fox still has a stranglehold on a giant piece of the right in the United States.
Does CNN want a piece of that? I mean, they did a town hall with Donald Trump. They've made some moves that media critics have questioned, as you know. What's CNN doing?
I think right now CNN is trying to report the truth as loudly and clearly as possible. And I think they've been excelling with coverage of the war between Israel and Hamas. I think there was, an effort last year, and I think an understandable effort by David Zaslav and others to try to figure out how to appeal to everybody, appeal to conservatives as well as liberals and moderates. But I think we have to make a distinction between conservatives and MAGA loyalists, okay? It's the same distinction Biden makes in his speeches between Republicans, who he's known for decades, versus MAGA Republicans who seem to want to burn it all down. You're not going to be able, in my view, to get through to Trump loyalists who have been told for almost a decade now that the real news is fake. So if that's the strategy at CNN, that wasn't going to work. But I don't think that was the strategy. I think the strategy was, and maybe to some extent still is, to try to show that it's real news coverage, not the fake news that Trump lied about. And, that's the problem for a lot of these brands, a lot of these media brands. They're up against a disinformation campaign. So I have a lot of sympathy for the CNNs and the NBCs of the world that are trying to get the word out that they're actually just doing their jobs, reporting what's in the world, but they're up against this hurricane of noise and lies from Donald Trump.
Brian, what's happened to Tucker Carlson? Do we know kind of how that has turned out yet? Because for a while it seemed like there were a lot of MAGA Republicans that were going to switch away from Fox and go to, I don't know what he's doing, but has he still got a big following?
He doesn't quite know what he's doing yet either, but he's making a lot of videos on the site formerly known as Twitter, and he's reportedly raising money and making ad deals so he can grow that into a real media company. I think he has big ambitions because he wants revenge against Fox. He wants to show Fox who's boss. But right now, his platform has diminished. He's not making as much of an impact. He's not as influential. Yes, he still has a fan base, but it goes to show, once again, that the machine is bigger than the parts. The parts are replaceable. Fox News is the platform that matters, not the individual hosts. And gosh, for whether you love it or hate it, that's a credit to Rupert Murdoch for making that investment almost 30 years ago.
Yep, and I always say what made the Fox network was Bart and Homer Simpson. So that's kind of when they finally turned the corner. Brian Stelter, thank you so much for joining us. Appreciate getting a few minutes of your time. Brian Stelter, he's a special correspondent for Vanity Fair, formerly a correspondent for CNN and producer of Apple TV's The Morning Show, which was just awesome. I
wanted to ask him about Towson University.
Yeah.
I saw that he graduated from there, and I went online and looked at it. Gorgeous campus.
I know.
I mean, it looks
Excellent
like
school. There's so many of these schools out there.
It makes me miss college to go through those pictures.
Exactly right. So anyway, so we're looking at these markets here. A little bit of a red on the screen here. S&P off about 0.25%. The NASDAQ off about 0.4%. So a little bit of weakening there. Yields coming in today. The 10-year Treasury is off 7 basis points. We're now at 4.45% on your 10-year Treasury. More coming up. This is Bloomberg.
Good morning. Williams-Sonoma, it surpassed expectations, but they cut its net revenue forecast for the full year. Bloomberg's Simone Foxman says the theme has been slowing sales, but higher profitability.
Expecting revenue to fall 10 to 12%. It had initially expected this to drop 5 to 10%, but raising its overall guidance for profits on margins, now seeing 16 to 16.5% versus Wall Street's expected 15.3% for the full year to come. In the third quarter, it was already the same story. We saw margins at 17%, a couple points higher than the estimate. We saw profits beat, but comp sales were down.
Now, right now, Williams-Sonoma is up about 5%. Cisco Systems ported quarterly sales and profit that topped expectations, but its forecast is raising concerns that corporations are pulling back on tech spending. Bloomberg's Ed Ludlow explains.
What they said was that in the last 6 months, they have shipped against a backlog of network gear orders. In other words, some of the biggest enterprise customers finally took delivery of equipment that they've been seeking for quite a long time. As a result of that, Cisco has done well over the next 6 months. But what those companies or enterprise customers will now be doing is installing and utilizing the orders they've already made.
Shares taking a beating. Cisco Systems down about 11%. And Lenovo is targeting PC sales growth this quarter after signs of a recovery helped it report a smaller than feared profit decline. The company's CEO says he expects better demand in China and adds that artificial intelligence will push the next round of growth in the next year with AI PC and an AI smartphone. Those are the company stories we're following this hour. I'm Lisa Mateo. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
We're coming up to 11:22 on Wall Street. I'm Nathan Hager. We check the markets all day long for you on Bloomberg, and stocks are adding to their declines now, with the S&P 500 down 1/4% or 10 points. The Dow is down 0.4% or 134 points, and the Nasdaq is lower by 48 points. That's a drop of 0.3%. 6 of the 11 main industry groups in the S&P 500 are in the red, led lower by energy. That sector's down 2 1/3%. NYMEX crude is cratering, down 4.2%, trading at $73.43 a barrel. And we continue to watch treasuries rise and yields fall off the latest data showing signs of gradual economic slowdown in the U.S. 10-year Treasury is up 17/30 seconds for a yield of 4.46%. COMEX gold's moving higher by 1.2% at $19.8760 per ounce. The euro at 1.0866 against the dollar. British pound 1.2428, and the yen is at 150.48. Some broad weakness, a slight weakness across the G10 currencies for the dollar. That's Bloomberg Business Flash, and Bloomberg Markets continues with Paul Sweeney and Matt Miller.
All right, Nathan Hager, thank you so much. We appreciate it. Matt Miller and Paul Sweeney, we're live here in our Bloomberg Interactive Brokers studio. I want to get right to our next guest because we want to talk markets, we want to talk stocks, and we do that. We like to check in with David Kudla. He's the founder, CEO, and CIO of Mainstay Capital Management. Hey, David, thanks so much for joining us here. I guess since the last time we talked, I don't know, the 10-year Treasury's gone from 5% down to like 4.5%. I've got the S&P up 8 or 9% from that late October period. So it's been kind of a little bit more of a risk-on feel to this market. How do you guys kind of interpret what's happened?
Yeah, I mean, it's only been a couple of weeks. And in that couple of weeks, especially earlier this week, we have seen a nice rebound in stocks. We talk about the escalator up for stocks and then the elevator down, and we got a little bit of the elevator up over this past week or two. And we think that right now, if we are looking forward through the end of the year, we're constructive on the stock market, especially growth stocks, especially technology, and the Magnificent Seven. We keep talking about it, but that's where we know that they're not affected. Those big technology names are not affected by interest rates. They have enough free cash flow to finance what they want to do. We saw a pop in small cap stocks, but we still would be light in that sector because of what we're seeing in the economy. They're will be the most hit by the deteriorating fundamentals. So I think that rates, we've seen them come down a lot here, right? But I think we're still going to be in trading range for rates for a while because the Fed is going to be on pause for a while. There's a forecast of 4 rate cuts next year, starting in the second quarter, either May or June. But all that's yet to be seen. We've seen that before. We go back to 2019, the end of 2018. We were supposed to get 4 rate hikes in 2019. We got 4 rate cuts. So, sometimes we look that far out. There's just too much road to travel between here and there.
So the Magnificent Seven, can they keep climbing the way they have? Because we've learned, I guess, this year that they're not just growth stocks, but also safe havens.
That's just it. Investors look at those stocks when, we're concerned about the rest of the stock market. We're concerned about small caps that are now paying a lot higher debt because they rely more on debt for their capital. And we have technology companies that are not profitable, but the big cap tech, and really beyond the Magnificent Seven, but the big cap, mega cap tech are companies that just have great business models, great balance sheets, free cash flow, and they have become literally a defensive trade when investors are concerned about the markets. But you look at what happened here over the past couple of weeks. There was a 10-day period where they were screaming at one of their best growth rates this year, and that was just right here in the last couple of weeks.
David, if the Fed is in fact done at raising rates, is it time to kind of get into bonds here? And if so, kind of how far out do I want to go?
Right. So we've been talking about staying on the show on the very shortest end of the curve, and that's worked out because of yields being so high in that area. Those bonds, very short term, whether it's corporates or treasuries, even high yield, and floating rate has worked very well. Now it looks like, certainly if we look at these past days, we can start to creep out the curve and take on duration. But as I said on the show before, we've heard analysts, investors talking about that all year. We're going out for duration and they've gotten burned. So we're glad we've stayed where we are. I don't think that this is where we get a precipitous fall in interest rates. I think that we'll be in a trading range. So going out the curve for a little bit more duration can make sense now, but we're not going to rush out to load up on 30 years. There's going to be that time when they do come down. But if we look at what the Fed is contending with, they are steadfast in their target of 2%. And we got some great numbers on CPI and PPI. PPI headline was a deflationary number. So, we do see that progress. We do see the deteriorating economic fundamentals that would lead us to take on those longer duration bonds. But I think it's yet to be seen because, the Fed could end up in that tug of war between they want to cut rates because of the economy, but inflation hasn't come down far enough yet. And, if we believe Powell and what he's saying, they are steadfast in that goal of the 2% target. And we've covered the easy road to that, down from 9.1% headline CPI. This last part, even with the great numbers we had this week, and we're very encouraged by that, very happy about that. But that if we still get some stickiness, it could be a while yet before they get to where they want to be.
I guess Powell has said time and time again
on inflation.
He's said time and time again that they're going to 2. He hasn't been explicit about 2.00, but basically near there. Are you worried that inflation resurges? No, he's got to leave his optionality open. I'm not trying to pen the guy in. But are you worried that inflation could be resurgent?
I'm not as worried that inflation will be resurgent. They're just, I mean, when we look at, and one thing we've talked about, the labor market, start there. Highest number for continuing claims in a year that we just got. We've seen labor market is slackening. I think they want to see we're at 3.9% unemployment. They want to see meaningfully above 4.5%. But everything is trending in the right direction. And if you look at the auto sector, if you look at what's happening with credit card interest rates and delinquencies, and some of these other areas are actually concerning. Pointing towards a recessionary environment where clearly they need to do something, unless inflation is sticky and they wait for that reason.
What about when you look at the consumer, and we've just started to get really a slew of retail earnings, but we've had Target and we've had Walmart and we've had Macy's. Are you worried about the U.S. consumer? Because some people paint a drastic picture that makes me think their savings are gone. They've got to charge everything on credit cards. They're missing some of those payments. They're getting their autos repossessed. On the other hand, others say, look, we're just getting back to what normal American consumers are like in 2019. How do you see it?
So, yeah, well, it's both, right? We're getting back to what normal consumers are like, but what is happening at the same time is they've gone through, going through their pandemic savings, and so they've gone to credit cards. We've seen credit cards rise, and we've even seen where there are some refinancings, and people ask the question, why would someone be refinancing now with rates as high as they were, at least before this week? And I think it's simply because they need the money. They want the money to spend. So the consumers remain strong. That's important. It's 2/3 of our economy, right? The consumers, 2/3 of our economy. And that's what we really need, right? That's what we need for the market to hold up and to have a positive outlook, is that the consumer stays strong. But it's getting to be a little bit tougher and tougher to see that road ahead where the consumers stay as strong as they have been this year.
So, David, we just kind of getting through the teeth of the earnings period here. What are your takeaways from what we just heard and saw from corporate America?
We're seeing mixed earnings, but if we look at what's been happening with the number of companies, that have reported, more than 85% of companies reported, we're seeing a median beat of around 6 or 7%. That's encouraging. So we're really, that concern about earnings in this quarter is now turned into, I believe that, we've seen the trough, and we're coming back to where we see positive earnings going forward. Back on June 30th, we were expected to have negative earnings growth or earnings contraction of about 1.5%. And that's been rising, and now up to a number blended earnings rate of about 4.1% with the earnings season almost done. So I think that's in aggregate is very encouraging. It's coming better than expected. And I think we've now gone through that trough where the earnings recession is behind us.
Yep. All right, David, thanks so much for joining us. We appreciate getting your perspective, your comments, as always. David Kudla, he's the founder, CEO, and CIO of Mainstay Capital Management. He's also the founder and sponsor of Engage, the world's largest student stock pitch competition and conference hosted at the University of Michigan. With our news in New York City, here's Michael Barr.
Thank you very much, Paul. Matt, more breaking news. According to several media outlets, embattled Congressman George Santos of New York will not seek re-election after a House panel has found evidence of crimes. The House Ethics Committee found substantial evidence that Santos violated federal law. Of course, we'll have more on this story throughout the morning. In a late-night vote, the Senate overwhelmingly approved the House's short-term spending bill to avoid a government shutdown at the end of the week. Senate Majority Leader Chuck Schumer said Congress will resume negotiations after the holiday break.
Both sides genuinely care about approving aid to Israel and Ukraine and helping innocent civilians in Gaza. So I hope we can come to an agreement, even if neither side gets everything they insist on. but we will be working on it immediately when we get back after Thanksgiving.
The leaders of China and the U.S. met on the sidelines of the APEC summit in San Francisco. Following hours of talks with Chinese President Xi Jinping, President Biden announced the resumption of direct Chinese-U.S. military communications and joint efforts to curb fentanyl production. Xi is also suggesting panda diplomacy with the U.S. may soon be back in full swing. After the meeting, speaking through a translator, Xi told CEOs at a dinner last night that China might be sending a pair of pandas to San Diego.
We are ready to continue our cooperation with the United States on panda conservation and do our best to meet the wishes of the Californians so as to deepen friendly ties between our peoples.
This is the day to skip the cigarettes. Today is the Great American Smokeout. Thomas Ilioa is a tobacco expert at National Jewish Health.
We know that it causes many forms of cancer, heart disease, lung diseases. It even impacts things like diabetes and bone health.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
11:40 is the time on Wall Street. I'm Nathan Hager. We check the markets all day long on Bloomberg. Stocks are adding to their declines and Treasury yields are tumbling as well, with the latest economic data showing signs of continued gradual slowdown in this economy. Jones Trading chief marketing strategist Michael O'Rourke says the Fed is probably done raising interest rates, but he says that doesn't mean investors should overreact.
The problem is when we get a weak CPI, not even a week, that we still have 4% core CPI. We still have an inflationary environment, but slightly better than expected number. The market automatically translates no more rate hikes to, okay, we're going to cut 100 basis points. And I think that's the issue. It's just, it's a manic reaction that people just have to, take a step back and look at the data they feel confident about.
Hear more from Michael O'Rourke of Jones Trading on the Bloomberg Surveillance podcast. Right now, the S&P 500 is down 11 points or 0.25%. The Dow is down 146 points, 0.4% lower. The NASDAQ is down 0.4% or 57 points. 10-year Treasury is up 18.30 seconds. The yield 4.46%. The yield on the 2-year 4.83%. NYMEX crude is way down 4.1%. It's $73.51 per barrel. COMEX gold is moving up 1.2% at $19.8830 per ounce. The euro 1.0854 against the dollar. The yen is at 150.46. Got a couple headlines crossing the Bloomberg terminal related to cars. China's Geely Holding Group is offering 100 million shares of Volvo car. That represents about 4.1% of Geely's shareholding in the company. And this note from the Associated Press that the United Auto Workers Union members, the vote tally shows that they have approved a new contract with General Motors. GM shares are down 2%. That's a Bloomberg Business Flash. Bloomberg Markets continues with Paul Sweeney and Matt Miller.
All right, Nathan Hager, thank you so much. We appreciate that. Matt Miller, Paul Sweeney live here in the Bloomberg Interactive Broker Studio. So lots of auto news, which is perfect for our next guest. Barry Ritholtz, host of Masters in Business on Bloomberg Radio. He's chairman and chief investment officer at Ritholtz Wealth Management. Matt, do I care if Geely is selling 100 million Volvo shares?
You do, because, well, I don't know the ins and outs of their balance sheet, but I do know that Polestar needs money. And we're talking about billions of dollars. And Polestar is the EV company that was spun off from Volvo. It's now owned by Volvo and Geely. So they're looking for money from external investors because they're clearly not getting it from Volvo and Geely. No big deal, but now that you see Geely is also selling shares of Volvo, it raises questions as to why. I mean, maybe they just want to diversify.
All right, and Barry, here's my take on this whole EV thing, which, again, I just bought an internal combustion engine vehicle. Very happy with my BMW X3 in Duke Blue. Is it really going to be more of we're going to these hybrid things that are hybrid gas, hybrid electric? Is that kind of where we're going as opposed to all EV?
Yeah, so think about it this way. We've had a century to develop the infrastructure for internal combustion engines. When you plan a road trip to wherever you're going, you may think about where do I have to stop to sleep for the night or where am I going to get something to eat? But you never think, where am I going to tank up? Because there's a gas station on every corner. We're now in that transitional period between internal combustion engines and full electrics. And the hybrids, they're a fantastic transitional vehicle. If you have a plug-in hybrid or even some of the non-plug-in hybrids, the news came out yesterday, new Camrys are only going to be hybrids. They're not going to be just pure gasoline cars. This will be the transition until we have a robust electric charging infrastructure, and it's going to take another decade or so to get there.
It does look like a lot of manufacturers were pushing too far too fast with EV production and have scaled back those aims to now produce more hybrids, Ford, for example, but others as well. I wonder, though, why it takes so long to build the EV infrastructure, Barry, because, BP or Royal Dutch Shell, any of these big gas station operators could put an electric charging point at every single franchise if they wanted to. Clearly, they don't want to. And there's so many Electric vehicle charging points that are too crowded, so you have to wait for each person to do a half-hour, 45-minute charge before you get your turn. Or most of the ones I go to are broken.
Yeah, there's a big article in the Wall Street Journal today about someone went to 130 different EV charging stations. Some of them are broken. Some of them work, but have a problem with the handshake. Most of them don't take certain apps like Apple Pay. You have to actually fish out a physical credit card. It's funny. Some of them say cash or credit card. There's no place to put cash. So it's an issue. But think about what goes into tanking up your car with gasoline. Someone has to go out and explore for that and find it and extract it. And then it has to be refined. And then it's shipped around the world and around the country in order to get to your local gas station. And they have to be able to meet all of the state and local regulatory rules and the environmental rules. Like, that doesn't happen overnight. That's a long time coming. And they have all of this real estate. Real estate has gone up a lot. There aren't a whole lot of places where you could just plop down a place where you can run 20 or 30 electric vehicles, to say nothing of our entire grid is old and rickety. The electrical grid really isn't up to par. Like, to get where we need to get to with reliable chargers and a very robust electrical grid and somebody financially incentivized to put these everywhere besides Tesla, that doesn't happen overnight. We're still in the early adopter phase of electric vehicles, and it's going to take a while for this to play out.
So, by the way, Barry joins Hannah and myself on our podcast, Hot Pursuit.
Nice.
Have you listened to it, Paul?
I have. Very good.
Thank you.
I'm a big Hannah Elliott fan, primarily.
It's quite good. And of course, Barry's own podcast, Masters in Business, is one of the most downloaded podcasts at Bloomberg, if not at the most. I think they probably get a couple million downloads a month. But Barry has started a new podcast. No. It's never enough for this guy. It's never enough. Tell us about At the Money.
Sure. So we have focused on long form interviews for a while, and my day job is managing assets for about 2,000 families. Ritholtz Wealth Management runs about $4 billion, and we get requests all the time. Hey, how do I think about allocating to a bond portfolio? What should I do in terms of munis? What's the best way to sell a business? And so, given this breadth of experience we've had, instead of doing long form interviews, it's myself describing a quick issue in personal finance. It's about earning, spending, and most of all, investing your money. And I bring in an expert just for a quick couple of questions, like Eric Balchunas. Hey, why have ETFs become so popular? He explains. Dave Notting, why are fees down so low across the board? And we go into that. We're talking to people about how to buy a house, how to sell a business, how to purchase muni bonds, how to reallocate your portfolio, and perhaps my favorite topic, how to manage your own behavior, which is the biggest source of financial errors in investing.
And we got 30 seconds left. What is kind of the short answer on how to manage your behavior?
Be realistic. Don't chase alpha. Don't chase the hot manager. Have a plan and invest towards that plan rather than getting sucked up in the noise of everyday life. You have to think in decades, not minutes.
All right, Barry, good stuff. As always, appreciate checking in with you. Barry Ritholtz, he's a host of Masters in Business on Bloomberg Radio. He's a chairman, chief investment officer, Ritholtz Wealth Management. He's got this At the Money podcast. He's got your Hot Pursuits along with Hannah Elliott and Matt Miller from Bloomberg talking about the car biz. So he's a busy guy.
Yeah, and he also collects cars and does a lot of modifications to them, which are pretty cool. Like, he's taken a 911, an old 911, obviously a gasoline engine, and he sent it to a shop that's going to rip out all the internal combustion innards and replace them with battery.
Really? Wow.
Yeah.
I don't know why.
It's cool.
All right. S&P 500 off 0.2%. We're going to have more coming up. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
You got it, Paul. Shares of HelloFresh, they fell to a record 25% today, erasing $964 million of market value. Now this after the meal kit delivery company, it cut its guidance only 3 weeks after reiterating its targets. The Berlin-based firm, it blames fewer new customers in the U.S., as well as staffing challenges and water shortages over at its production facilities. A major airline, it has some news for those of you heading out of town for the Thanksgiving holiday. Bloomberg's Steve Podisk has that story.
Delta expects to fly as many as 6.4 million passengers between this Friday and the Tuesday after Thanksgiving. That would mean the Atlanta-based carrier would average more than 500,000 customers per day. While Delta advises passengers to arrive at the airport at least 2 hours before domestic flights and 3 hours before international, it also warns additional time may be needed this Friday and on the Sunday and Monday after Thanksgiving.
Delta shares down about 0.7%. And shares of Alibaba, they are lower. They're down about 9% right now. And this after the Chinese e-commerce giant, it said it's scrapping a plan to fully spin off its cloud unit. It blames U.S. restrictions on the export of cutting-edge chips. Its core business of selling goods to domestic customers recorded lower than expected sales. And to an e-commerce company right here in the U.S., Amazon. About 2 years ago, it came out with an Astro robot to help consumers with household tasks. Well, it didn't take off so well. And now the company is introducing a new version for businesses to work as a rolling security guard. It's priced at $2,350. Those are the company stories we're following this hour. I'm Lisa Mateo.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, looking at these markets, S&P 500 are off about 0.25%, NASDAQ off about 0.3%. The Russell, I'll note that Russell 2000 off 1.9%, so the small caps giving up some of the gains they had over the last few days. The big move for me is oil. WTI crude oil's off 4.7%, $73 per barrel, so big pullback there, and we continue to see that. Yields come in a little bit here. 10-year Treasuries down about 5 basis points, 4.47%. With our news, in New York City, here's Michael Barr.
Paul, Matt, thank you very much. Embattled New York Republican George Santos announced today that he will not run for re-election to his seat in the U.S. House. The news came just after the GOP chairman of the House Ethics Panel called for Santos's expulsion after a committee investigation found substantial evidence the New York Republican violated federal criminal laws. The Senate voted overwhelmingly to avert a government shutdown by passing the House's government funding package.
On this vote, the yeas are 87, the nays are 11. The 60-vote threshold having been achieved, the bill is passed.
Senate Majority Leader Chuck Schumer.
I am happy to announce there will be no government shutdown. As of Friday night, the government is staying open.
The bill keeps some government agencies funded into January, others into February. A group of Senate Republicans overnight tried unsuccessfully to end GOP Senator Tommy Tuberville's ongoing blockade of military nominees. Senator Lindsey Graham expressed his frustration.
I promise you this will be the last holiday this happens. If it takes me to vote to break loose these folks, I will.
Tuberville is protesting the military's abortion policy. President Biden says China has agreed to restore military-to-military communications, crack down on fentanyl, and also spoke about artificial intelligence. Biden and President Xi met on the sidelines of the APEC summit in San Francisco. Bloomberg Government's Jack Fitzpatrick.
If you heard any clips of President Biden speaking about it and saying that this was a productive meeting, that it went well, there does seem to be some substance behind that. It was not just a chance to shake hands and cool any tensions. It seems that there were some specific areas where they made progress, and that's a good thing. It's obviously still a competitive relationship, but a good meeting.
Bloomberg's Jack Fitzpatrick. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Matt.
Hey, Michael Barr, thank you so much. We appreciate it. Hey, Matt, with Formula One preparing for the Las Vegas Grand Prix, Canadian billionaire Lawrence Stroll has sold a minority stake in the Aston Martin team to U.S. private equity firm Arctos Partners. The investment by Arctos, which has a stake in the Boston Red Sox and Liverpool Football Club owner Fenway Sports Group, values the F1 team at about $1.2 billion US. That's according to a person familiar with the deal. So maybe taking advantage of some of the hype that's building around F1 here as we get ready for Vegas.
Yeah, absolutely. I think it'll be interesting to see because this event was built up so much, and we were hearing stories about how impossible it was to get suite at the Bellagio, difficult to get, tickets for an affordable price to the race, $15,000 dinners. But lately, you've seen ticket prices come down. So Hannah Elliott wrote a story about the fact that maybe the hype was a little bit too built up and some of the shine has come off. On the other hand,
but Hannah's going. She's going.
She's going. Yes,
of course. She's going to be at the parties and doing all the things.
Yeah, as part of her job.
Yes, of course. She'll be reporting.
She's got to go to Formula One and hobnob with the elite. And
she got a wide day.
But the question is, how popular is this sport right now? Because it got so huge after that Netflix series.
Yep.
But now that Max Verstappen wins like every race, isn't it boring to watch?
Yeah, interesting. But Liberty Media, John Malone bought Formula One several years ago, and they invested a lot into that. They want to expand it not only in the U.S. but globally, and they were telling investors at the time that they saw a lot of opportunity in sponsorships and digital media rights, and a lot of opportunity there. So we'll pay attention. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we got some smart talk here. We're going to kick it off with Laura Martin. She's a managing director at Needham & Company. She's an analyst. She follows a lot of the media and technology and the convergence of tech and media. So we're going to talk about Meta, Apple, Disney, all kinds of good stuff there. And then Mark Douglas, CEO of Mountain, he's going to join from Las Vegas to discuss his company's partnership with Alpine for Formula One, sports advertising, all that good stuff. He's in Vegas. I don't know why we're not in Vegas, man. Henry Wu, head of X-Trackers Products U.S. at DWS Group, is going to join us and talk to us about the release of their new ETF, the U.S. National Critical Technologies ETF. So that should be pretty cool. I mean, more money going to ETFs than they know what to do with there. But let's kick this whole thing off with Mr. John Tucker.
All right, red on the screen today. Paul and Matt, latest data continues to point to a softening U.S. economy. And the world's biggest retailer, Walmart, growing more cautious on the consumer. So that adds up to a lower day for stocks. And continuing applications for U.S. unemployment benefits rising to the highest level in almost 2 years. Morgan Stanley economist Helen Zentner reacted to those figures this morning.
People that have been losing their jobs are staying unemployed for a bit longer, and that's been rising since October. So it's getting more difficult to just get reemployed right away. This is the kind of softness in the labor market that we have needed, and of course it takes pressure off the Fed to raise rates.
You have 5 of the 11 major industry groups in the S&P 500 lower right now. The biggest drag coming from energy. You have NYMEX crude plunging 4.5%, right around $73 a barrel. And Cisco among the individual laggards after its results after the close yesterday, right now down close to 12%. Overall, S&P 500 down 9, down 0.2% at 44 at 93. The Dow 145 points lower, and the Nasdaq 100 down 42 points. That is down 0.3%. 2-year yield, that's down 6 basis points. The 10-year 6 basis points lower. That's at 446. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Matt and Paul.
All right, John Tucker, thank you so much. We appreciate that. Matt Miller, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Red on the screen here is John, who's just reporting lots of earnings, lots of company-specific issues going on out in the marketplace. Let's break it down. Bailey Lipschultz, he covers all the markets for Bloomberg News. He joins us here in our studio. Bailey, what are you looking at?
Yeah, as JT mentioned, your worst performers in the S&P 500, Cisco Systems, ticker CSCO, down 12%. That's the biggest drop since May 2022. Also, the second worst performer, Walmart, ticker WMT, down 7.5%. Two different earnings results, two different kind of stories there. When you look at the Cisco story, weaker sales forecasts really weighing on the company, discussing the fact that corporations are reining in their spending on technology. Sales are going to be between $12.6 and $12.8 billion. Analysts were looking for north of $14 billion. So big drop there for the company, falling short of earnings now. Year to date, the company now down 1.3%, so markedly underperforming the broader market. And then Walmart, cautious consumer outlook, late October dip, some of the things that we've been seeing from the economic data, hearing from the likes of Target and Home Depot that saw slowing purchases as consumers pull back from some of those discretionary items that they're buying in the month of October. Heading into a crucial holiday season, it'll be interesting to see what they end up reporting in a few months, but just looking at that initial reaction, Walmart down 7.5%. Prior to the print was up 20%, so outperforming a lot of those peers.
What do we know from these earnings reports, Bailey, about the U.S. consumer?
They are pulling back that consumers' discretionary spending. So you're seeing what we've been seeing and what we've talked about really for the bulk of this year was consumers shifting down, buying some of those private labels. If I go to ShopRite, I buy a ShopRite brand as opposed to paying up for those more traditional brands like a Kleenex or regular Jell-O if you're a Jell-O fan. So that seems to be what we're continuing to see.
Are there people who aren't Jell-O fans?
Well, generic Jell-O is.
But when's the last time you made Jell-O is what I guess I'm saying.
Yeah, that's a good point. About 3 months ago, I would say.
No, you.
Yes,
What did
I
you?
did.
What did? Ask him what he put in the Jell-O.
It was clean. I have a 3-year-old daughter. Do you not think I make Jell-O on the
No,
reg?
you buy the already made Jell-O.
No.
Of course you
No.
do. That's why God made that product.
At what point does your daughter eat pudding? Are you shifting to pudding?
She hasn't had pudding yet,
Okay.
no.
I
But
was-
I mean, it's a good idea.
Snack packs are good.
It's
man.
pretty sugary.
Yeah. That's
Jell-O,
why I
you can
asked.
make Jell-O sugar-free, you know.
Really?
It's all different colors. It wobbles.
Oh yeah, that tastes great.
Yeah, that tastes great. Thanks,
She
Dad.
doesn't know what sugar tastes like. So to her, it's amazing.
It's perfect.
Yeah.
Another company that fell short of expectations, Palo Alto Networks, ticker PANW, right now down 6.7%. A lot of concerns around their billings expectations. Analysts calling out that it was underlying results were solid, but the shorter duration payment terms are going to impact the business going forward. PNW down 6.8%, only trading at the lowest level in a little over a week, so not a huge move in the grand scheme of things. We actually saw post-market weakness for some of those cybersecurity peers, thinking CrowdStrike and Zscaler, but they're actually up on the day, so not having a massive read across, which some would have been probably expecting just given the size of Palo Alto.
All right, so the news today, General Motors workers vote to ratify new union contract in a tight vote. Stock down 1.9%. Go figure. But at least they got it behind them.
Well, and this is a company year to date, GM is down 18%.
Yep.
So I know Matt loves the cars, so this has been an overhang for the company, but the stocks have really done nothing.
Yeah.
For investors.
Yeah. Well, I mean, it's kind of like our next guest, Laura Martin, who covers the media space. Here's an industry that's going through this unbelievable evolution, transformation from internal combustion to some type of electric or hybrid. And boy, if I'm an investor, do I want to make a call there? Yeah. I mean, I'm just staying out of it. So, but good news for GM. Anything else there, Bailey?
No, those are the main things we're keeping an eye on.
GM has a 3.4% P or 3.4 PE.
I know.
And Ford only has a 4.5 PE.
Can't give these things away. So.
No.
All right, very good. All right, let's switch gears here. Let's get to our next guest, Laura Martin. She's a managing director, senior media and internet analyst at Needham. She's based out in Los Angeles, right in the heart of Hollywood, does all that stuff out there. She joins us via Zoom. Hey, Laura, I want to start with Disney here. You know, Bob Iger's been back now, I don't know, a couple of years, a year and a half, something like that. What do we know about where he wants to take this company?
You know, I think on the part, we have two companies here now. One is Parks, and it's on a tear. Record high margins, really a big cash flow generator, and he's going to invest $60 billion in that business. So that business has proven its growth trajectory, and he's going to invest in driving that growth longer. Fine. I think what Nelson Peltz is arguing about, and I think the long-term media analysts are on this, is I don't think he's actually shown us that he can grow the now that streaming sort of hit maturity and it's still never made money. Can the content business grow, Paul? And if not, why is he keeping all these people? Like, it's okay if a business, he doesn't have a dividend. So it's okay if a business doesn't grow. If you cut your people and you raise your dividend, that's called a GARP stock. That's called a value stock. Okay. But right now he's investing like the content business is growth. And I think Wall Street is unclear that the content business is still a growth business.
All right. So, I mean, it's almost sacrilege to ask this question, but you could make the call here. Like, if I'm an investment banker, I'm a media M&A banker, boy, there's a lot of pieces here. Do I try to break this company up and see if I can get better value in the marketplace for the pieces?
You know, a lot of these CEOs don't want to relinquish actual control of an asset because that's how they judge their power, is how many employees they're reporting to them. I do like the idea, Paul, of spinning off 10% of Parks because I think Parks really is a growth engine. I think you get a much higher valuation for Parks if somebody could buy it alone, away from the content assets where there are a lot more questions. And in creating that security, but still keeping it for tax consolidation and keeping control over it, you would get a higher value for the aggregate Disney shareholder.
What's going to happen to ESPN?
Good question.
Well, lots of speculation here. I do, Bob Iger on the call did say he's looking for people or companies that it can enhance his distribution, give him more content rights, and or give him more marketing, like gravitas. So he doesn't really need money. Yeah, well, I like the NFL as an idea a lot, or the NBA, because like the NBA rights, NFL has got locked up for a decade, so he doesn't really need the NFL right now. But I do like the NBA, which is coming up, and they're saying that the cost of the NBA might go up by $4 billion. And Bob Iger has promised us an extra $2 billion of cash flow next year. Well, if the NBA rights go up by $4 billion and he pays that, he's going to wipe out that promise and make his free cash flow even worse. So I like that idea as a strategy. Look, NBA will give you a little less cash than you want, but we'll give you 10% of ESPN, and we'll sign a 10-year deal. That's actually a better deal for the NBA, if you ask me.
Interesting. Hey, so Laura, I want to get your opinion on something. When you and I were coming up in the business, the media moguls were Ted Turner, Sumner Redstone, Rupert Murdoch. Is David Zaslav the new media mogul for the kids out there today coming up in the business? Is he it?
Dude, did you read the New York Times story on him this morning?
I did.
Ripping on Jeff Zucker for having tears in his eyes.
Yes.
After Zucker was like, I needed you as a friend.
Yep.
I mean, that guy sounds pretty harsh. Do you want a friend like that?
I don't know. So I'm asking.
Do you want a
Laura.
boss like that?
Exactly.
Do you want an employee like that? Would you want to be in the same room as a person like that? I mean, I don't know if it's true. I'm just reading the Times story, but, it's rough.
So, Laura, tell us about Zaslav.
So I will. I'm going to answer your question, though. I think the new media mogul is Jeff Bezos, who now no longer runs Amazon. The guy who started Amazon Prime is a media mogul. I think it is possible it is one of the few streaming services that survives because it's got Amazon e-commerce.
Yeah, right.
And Amazon Music and Amazon and MGM's library. I think the new definition of media mogul, it's too small. David Zaslav is too small. The company he runs is too small.
But isn't Amazon kind of then also ran to Apple? Because Amazon Music, what? I use Apple Music. Amazon Prime, yes, I have it, but Apple TV is much sexier, right? Why isn't Apple the big media mogul?
Oh, well, I guess from a media mogul point of view, I mean somebody who runs around Hollywood. Does
Okay, that's a good point.
Well-known.
Sorry, I guess it's not Tim Cook.
Mogul doesn't just mean you run a business. Like there's literally when I do cover Apple. When I think of them, I think of these brainiac guys designing beautiful pieces of hardware, where services is sort of the add-on to keep their hardware selling. None of them feel like moguls to me. Literally the opposite of moguls.
Yep.
Like down-to-earth engineers with beautiful design characteristics. None of that is about having lunch at Spago's.
Meanwhile, Jeff Bezos is ripped.
Yes.
Yeah.
He's got a trainer coming every day.
Does he? Is that how he does it?
I mean, I don't know. He looks like he does.
So, Laura, talk to us about Meta. You have been kind of underperform on the stock. It's just been ripping. What do you think's going on there with the stock?
Zuckerberg's in good shape too.
Yeah, he is. So what do you think's happening over at Meta, and maybe what the street might be missing, or maybe what you're seeing?
Yeah, so I think near term he cut a lot of people. Last year he cut 25% of his labor force, which, as you know, Paul, destroys morale for an enterprise. So he cut 25% of his people, and he had anniversaried the negative comps. Remember, he said when iOS changed its privacy policy, when Apple changed its privacy policy, he was going to lose $10 billion in revenue. He did that for a year. So his revenue went negative for a year. So he's back to positive revenue growth and acceleratingly positive revenue growth. And he has 25% fewer employees. So right now that stock's on a tear this year because of those fundamentals in the near term. Our sell is predicated on three things. One, he doesn't control his content or his distribution. His content is user-generated content, and they're moving to TikTok. And they're taking their clients to TikTok. And the ad revenue is following them to TikTok. So the competitive situation in his core business is really bad. And the regulators are late, so they think he's a monopolist. So they're going after him for his market position 3 years ago. So he has regulatory headaches that cost a fortune and distract the whole enterprise. So he's got regulatory hassles of being a monopolist when really TikTok is chipping away at his base. And then the metaverse spending is coming back next year. And now he has a whole new spending category, which is called generative AI, which should be a huge revenue generator, except he's giving away his large language model. He's not charging for it. So here's another big cost center called generative AI. and he's making everything he does there, he's giving away in an open large language model. So, none of this is good fundamental outlook, even though this year I'm getting really killed. My rating's wrong this year.
All right, so what are you really spending your time on these days? Is it Apple? Where do you think your clients should be thinking about it for the next 1 to 2 years? Because boy, you take a look at some of the traditional media companies that you and I grew up with. That's a tough call right now.
Yeah, unfortunately, I think all these media companies have become too small. I mean, when you have somebody like Apple generating $90 billion a year and Google, meaning Alphabet, generating $60 billion a year of free cash flow, that's like bigger than the market cap of like a bunch of these companies combined. So I think the answer is the old media companies need to merge into these global distribution juggernauts. They need to get bought by them. The problem is, Washington, D.C., with Democrats at the head of every agency, it's very tough to get acquisitions done. So what these media companies need to be doing is shrinking, meaning laying off people, increasing their dividend, and they've become value plays. They are no longer growth businesses.
Is there a shakeout here? Is there still maybe consolidation of media company A, media company B getting together? Last gasp.
Yeah, I mean, I think there's a widely, almost a consensus rumor in a sense that Paramount's too small, needs to get bought. It owns CBS, so it cannot be bought by NBC, which is Comcast. It cannot be bought by ABC, which is the Walt Disney Company. So, and it can't be bought by Fox, which owns Fox. So really, David Zaslav or, I guess like Amazon could buy it or something. But I think there's sort of a consensus that probably Warner Brothers Discovery buys Paramount because it doesn't own a broadcaster already.
Right. All right, Laura, thanks so much for taking the time. Always appreciate getting some of your time. Laura Martin, she's Managing Director, Senior Media and Internet Analyst at Needham & Company. She's been based out on the West Coast her entire career, so she's kind of right in the backyard of kind of what's happening out there in the world of Hollywood and media and entertainment, so always a good take there.
It's so juicy.
Yeah.
That industry.
It used to be a lot.
It's much more exciting than, say, I don't know, coal production.
Well, I switched from...
Even though there's that interesting differentiation between thermal coal and metallurgical coal.
Yeah, I started out my career in transportation following railroads and trucks, and I decided I think media might be a little bit more fun than
railroads and trucks. Also not as sexy as media.
Exactly.
That's a very good point.
Exactly. So, but it was a fun ride. S&P right here is pretty much down about 0.1 of 1%. So still pretty calm there when you look at the various indexes out there. The S&P and the Nasdaq both off about 0.1 of 1%. The VIX, I'm calling that out for Tom. We're sitting right there at 14.19 on your VIX, well below 20, which gets people's attention there. This is Bloomberg. Let's get some company news right now with Lisa Mateo.
Thanks, Paul. Macy's, it's reported third quarter profit that beat expectations thanks to better inventory management. But same store sales, well, they fell once again. Bloomberg's Katie Greifeld has the breakdown.
You saw adjusted earnings per share come in at 21 cents. That is well above the average analyst estimate of 0 cents. So again, a beat there. You also saw gross margin come in just above 40% thanks to fewer product promotions. And an interesting wrinkle in this report was the drop that you saw in same store sales, a third straight quarter actually of declines.
Yeah, but that doesn't seem to have investors worried too much. We have Macy's right now. They're up about more than 5.5%. And Walmart lifted its profit forecast, but just modestly. And this after signs of weakness at the end of October. And that has shares lower. Right now, they're down about more than 7.5%. Bloomberg's Abigail Doolittle, she has more.
Now, it did rebound apparently in the beginning of November, but they're talking about that around the holidays. So they're kind of cautious here on the consumer. They're saying specifically that we are more cautious on the consumer than they were just 90 days ago at this time. Also making this super interesting, at least to me, Target said something very similar yesterday, but Target going into their print yesterday, and it was a blowout in terms of adjusted earnings. That's not the case here for Walmart.
Now, Abby had mentioned Target earnings. Yeah, yesterday shares were soaring. Today, they're lower. They're down about 0.5%, and that comes after TD Cowen downgraded the retailer to market perform from outperform. It points to budget-conscious consumers that are just driving those negative trends in discretionary categories like home and apparel. Those are the company stories we're following this hour. More Bloomberg Markets in just a bit. I'm Lisa Mateo. This is Bloomberg.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The S&P 500 is hovering just below the 4,500 level right now. The narrative that the Fed has done raising rates, that's still there, but more the focus is on slowing economic growth. In its earnings report, Walmart worried about a weaker consumer. And it's taking a longer time for the unemployed to find a job. Continuing applications for U.S. unemployment benefits rising to the highest level in almost 2 years. Cisco on pace for its worst day since May of last year after its earnings report after the close of trading yesterday. And Applied Materials earnings, we're going to get those after the close. One of the things investors are going to be focused on, sales from China. Right now, the S&P 500 just 5 points lower. That's down to 0.1%. 44 at 97 on the index. The Dow Jones Industrial Average down 130 points. And the NASDAQ 100 right now, 14 points lower, down about 0.1%. The 10-year yield 7 basis points lower. We're at 445. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Matt and Paul.
John Tucker, thank you so much. We appreciate that. Matt Miller, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, broadcasting live as well on YouTube. So check out youtube.com and search Bloomberg Radio. Matt, I think me and you are the only ones that are not in Vegas for this F1
Yeah,
race.
I do feel like a lot of people are down there.
Out there.
It is, or out there.
Yeah.
Out and down, really, isn't
Yeah.
it south
Yeah,
of
I
us?
never hear anybody say down Vegas.
Is that an Ohio thing? I say it all the time.
No.
Even if it's like in New Albany. But in any case, for me, I'm just not a Formula One fan because I was a huge fan when they had V12s and V10s. I loved watching Schumi race, you know, and David Coulthard and a lot of the late greats. But this new drivetrain technology and the feeling that they just can't pass. The cars are too big, the safety restrictions are too serious, and there's no passing. So if you get up front, you know, you're going to win. I don't like it. I prefer MotoGP.
Wow. Hey, Mark Douglas, President and CEO of Mountain. You guys like Formula One. Tell us about what you guys are doing there.
Yeah, we starting at the race here, the Las Vegas Grand Prix, we're sponsoring the Alpine car. So we announced that early this morning, and it's like performance meets performance. Performance TV on our side, and obviously performance racing for Alpine and Formula One. So it's exciting. I'm here in Vegas right now, and it's pretty exciting time.
See, everybody's there.
Yeah, no, it's like the biggest deal in the country right now. And it has been huge ever since the Netflix series Drive to Survive, right?
Yeah.
And obviously there's some very big personalities still in Formula One, not just the drivers, like Lewis Hamilton and Max Verstappen, but also the team leaders, Christian Horner, for example, Toto Wolff. Mark, what do you think about the popularity of Formula One? Is it continuing to rise? I mean, you must have faith in it, considering you signed the partnership deal.
Yeah, I mean, I think you nailed it in just kind of describing how big an impact the Netflix series had on the sport. Obviously, the Vegas is essentially now America's Monaco. That's what it feels like. I was literally out on the Las Vegas Strip this morning, and until 6 p.m. tonight, I mean, it's an open racetrack. I mean, it's probably the smoothest road in America. And they have all the, everything's up. I mean, you are literally driving down a racetrack to get to a meeting, and so it's pretty exciting to have that here in America, in particular, have it in a city like Las Vegas. The suites here are just like everything is elevated. It's kind of amazing.
It's Vegas, baby. Mountain, you guys work with advertisers. You guys work with, linear and cable networks and streaming businesses. For that advertising component there.
And they work with Ryan Reynolds.
And they work with Ryan Reynolds, yeah. Pretty good actor.
Chief Creative Officer.
Is that right?
I think so.
Chief Creative Officer.
Okay.
And there's a cool helmet with that the Alpine team now has. I think it has some relation to Deadpool, so it's a pretty cool item that's here in Vegas right now.
Dude, can you get a hold of one of those helmets?
I've seen it, but I asked if I could drive a car, and Yeah, I don't think a lot of people know this, but I'm actually, this is kind of interesting. I'm an accomplished jet pilot. And so I know how to go fast, but they don't want to let me do that on the streets of Las Vegas. So it doesn't look like it's going to happen.
Okay. Oh man, you should be able to get a helmet though, just like as a keepsake. Maybe have them make one extra one for you.
Yeah, we'll work that out. I mean, you'd be surprised how much of this stuff is a surprise to me. It's not planned out months in advance. I just find out like this week. Oh my God, this is a cool helmet, and I had to put my name in the hat.
Will you? I mean, as a partner, are you going to be able to watch the race like from pit lane? Will you be in the garage?
Yeah, absolutely. So last night was the opening ceremony. Yeah, it was on pit lane. We were literally directly above the garage. Tomorrow, I'm going into the garage, talking to some of the drivers. And you know what was most interesting about this is when we became part of the team, they interviewed us to figure out if we were winners. Like they don't just want like sponsorships. They want like a winning culture around the team. And it was interesting to see how much they take seriously like a culture of performance and a culture of winning and like I didn't expect that. And it's kind of almost an added bonus to have a group of people that are just determined to perform. Like, so that I love that.
Mark, when is the main race actually?
It is Saturday in the US, which is Sunday in Europe. So normally Formula One races are on a Sunday, and it will still be on Sunday in Europe. But it starts at 10 p.m. at night on Saturday. And the practice tonight, I think, starts at 8:30. And the qualifying, I think, tomorrow night is 1 a.m. Like, this is like, it's not only in Vegas, it's like Vegas lights. And and I can see part of the track from my hotel room. And I mean, it looks like a racetrack, but you're like looking out your hotel room.
So this is obviously geared for the kind of the global TV market, the European TV market, as opposed to the US TV market at this point.
Yeah. I think the two of you have the worst time because I think the qualifying starts at like 4 a.m. New York time.
Exactly.
Yeah. So like, okay, we'll take care of people in Vegas. They're still awake, and people in Europe, they're awake. But those New Yorkers, I don't know.
Forget about it. All right, let's go to your day job here at Mountain. What are you seeing in a digital ad space these days?
Yeah, I mean, there seems to be everyone's slow to make decisions. I think in every part of business these days, it could be capital expenditures, it could be advertising, whatever it is, but you're seeing like the companies decide to grow. And so, we saw Q4 kind of start out like just reluctantly, the train's just kind of slowly leaving the station. But I think as the quarter's moving on, you see marketing budgets ramping up, and I think that's true both probably for linear TV as well as like kind of performance TV that Mountain does on streaming.
So, I mean, we were just talking to Laura Martin, a media analyst at Needham & Company, and she's covered the media industry for decades,
yeah.
and
I know her.
Yeah, so she's really just kind of saying, boy, it's tough to see how many of these legacy media companies literally survive. I mean, how do you think this is going to evolve here?
Yeah, so I think so in the past, this is a topic I've actually been thinking about a lot. So in the past, like the TV industry kind of consolidated around the pipes, like the cable companies and the bundles. I think what is happening now is it's going to start to consolidate around the brands. So I think Disney is a prime example. Like, what Disney represents, what, in terms of children's programming, ESPN, in terms of sport, what does ABC represent? Like, and so you're going to start to decide, look, I have all this ABC content, but do I need the ABC brand? Or is it, and I think you're going to start to see a consolidation around like big tentpole brands, like tents, the brands that the consumer just hearing the name, they're like, I want to watch X, and they know where this is. Discovery, I want to watch a documentary or outdoor programming, I'm going to go to Discovery. I want to watch reality, I'm going to go to NBC Bravo. And if you don't have one of those brands, I think you're going to your brand's going to be like in the old days of car companies. It's just going to disappear over time and become part of those bigger brands.
Mark, I got a kind of a curveball question for you.
Sure.
I saw you up on screen earlier on our competitor there talking with Sarah Eisen, and she has an awesome shot in front of the Sphere, which to me is one of the most exciting things about Vegas. What do you think of the Sphere? What could you do with it? Like, what's possible with that thing?
Well, when you see it, I mean, I think a lot of people have seen like the eyeball.
Yes.
You know, when like turns into an eyeball. I've seen it turn into a basketball. I'm actually have a straight shot of the Sphere from. I was trying right from my hotel room. If I look out the window, I can see it. And I've watched all the various advertising go by, but it's just kind of iconic. I mean, and it's an instant, you know, icon here in Vegas. I think there are a lot of marketing possibilities, and just most importantly, I mean, it's just something that is like it's almost replacing the Las Vegas sign. Like, as a matter of fact, I saw the Las Vegas sign on the Sphere last night, and you know, as like when you think Vegas, you got to think the Las Vegas sign, the big hotels, the Sphere. Now Formula One, it's become almost instantly one of those icons.
All right, Mark, have a good time out there at the Formula One race this weekend. Mark Douglas, he's the president and CEO of Mountain. They have a new deal with one of those F1 racing teams, Alpine. So that's interesting to see that. Right now, let's head down to Washington, D.C. Nancy Lyons has got world and national news for us.
President Biden says his summit meeting with Chinese President Xi Jinping was some of the most constructive and productive discussions they've had, with both leaders agreeing to resume military-to-military communications. Defense Secretary Lloyd Austin says he welcomes that new dialogue.
We will continue to need the mechanisms to manage crises and make sure that we prevent the wrong things. We prevent things from spiraling out of control from time to time.
Austin spoke following a meeting of the Association of Southeast Asian Nations in Indonesia. Following his meeting with President Biden, President Xi had dinner with prominent U.S. executives. He pitched his nation as a positive force for world peace and said he did not want a Cold War or a hot war with anyone. Bloomberg's Anne-Marie Hordern has more on the purpose of the dinner.
This really just felt like Xi Jinping's moment to address the business community, and because he was so dovish in these comments, it really felt like he was trying to forge a path forward with the business community. But remember, we've talked about this time and time again, he is dealing with a lot of economic issues and a fragile economic recovery from the pandemic at home.
Bloomberg's Anne-Marie Hordern reporting from San Francisco. The House Ethics Committee is finished looking into Congressman George Santos and has decided there is, quote, substantial evidence of illegal behavior. In a referral to the Justice Department, the committee writes, Santos knowingly caused his campaign committee to file false or incomplete reports of the Federal Election Commission, used campaign funds for personal purposes, and violated the Ethics in Government Act. Santos has announced today on social media he will not be seeking re-election. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The major averages turning mixed right now. The latest economic figures pointing to a slowdown, and the figures reinforce the speculation the Fed is done raising rates. Wei Li at BlackRock is looking for economic growth of only about 0.5% next year.
Is growth going to slow down? Yes, I think so, because we have had the fastest rate hike cycle since the 80s, and it's going to act on growth with a bit of a lag. But we're likely going to see kind of rolling growth slowdown in different parts of the economy.
And as the earnings season draws to a close, traders remain focused on the big box retailers. Yet Walmart, the largest retailer, slumping amid a cautious tone on the outlook for consumers. Macy's climbing on a profit beat. And then Cisco Systems sinking after a bearish forecast. They reported after close yesterday. Those shares, Cisco shares right now, 11% lower. Overall, the S&P 500 just turning positive, up less than a point, above 4,500, 4503 right now. The Dow Jones Industrial Average 101 points lower, and the NASDAQ 100 back in the green. That is up 14 points right now. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul.
All right, John Tucker, thank you so much. We appreciate it. Matt Miller, Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so just head over to youtube.com and search Bloomberg Radio. All right, let's talk ETFs, because that is where all the money is going. It begs a question, is there even a future for the mutual fund business, which is a business I came up on? You had to go up to Boston and see all the big mutual fund companies. I don't know if that's even a thing anymore. Henry Wu joins us. He's head of X-Trackers products for the U.S. DWS Group. Henry, thanks so much for joining us here in our Bloomberg Interactive Broker Studio. X-Trackers for you, that's your brand. That's what you call your ETF business, right?
Exactly. X-Trackers is our ETF business together with our passive mandates business. It is essentially a key component of DWS. It is identified as a key growth areas for our firm for the next years.
So how many ETFs do you guys have these days?
As of today, we have 44 ETFs
Okay.
in the US, and we envision this to grow substantially in the next years.
All right, so you guys have a new X-Tracker, new ETF, DWS, I guess the U.S. National Critical Technologies ETF. What is that?
Well, essentially, let's take a step back. Our key goal is also to develop a robust thematic equity ETF range.
Thematic ETFs.
Thematic ETFs.
What's an example of a thematic ETF?
Thematic investments is really investing into tomorrow's economy.
Okay.
So we have identified a few key areas. First is the green infrastructure development in the U.S., as well as the critical technologies segment in the U.S. that is likely going to experience substantial growth when it comes to experiencing political tailwind and economic development.
All right, so the critical technologies, geopolitical considerations. So what does that kind of incorporate? What would go into that ETF, for example?
Our interpretation of critical technologies is based on the 14 critical technologies.
Is this another way of saying AI?
No.
Okay.
No, definitely not. Now, and I'll go into it because the critical technology has defined by the DoD last year, it has 14 components to it. And it's not the traditional technology where normal investors would envision it be IT or software. It actually covers a substantial amount, a much broader spectrum with breakthrough technologies and transitioning technologies in biotech, AI including one of them, and renewable energy. So these technologies, as viewed by DoD and the US government as a whole, is deemed critical when it comes to protecting the future leadership position of the US, especially during this geopolitical tension and landscape from both economic and national security reasons.
I mean, you could argue you couldn't pick a better time to launch this thing. We've got two hot wars, one in the Middle East, one in Europe. I mean, and then you've got this whole issue with China and that part of the world. I mean, so how are you kind of marketing this thing? This thing, you're saying that these are technologies that the U.S. government, the Department of Defense, deems as just critical going forward?
Exactly. These are the areas where substantial investments will go into these critical technology areas, whereby it helps U.S. to secure its leadership position. But at the same time, our view when it comes to investing is really to have a well-diversified portfolio. We're definitely not saying invest into U.S., but not for adversarial nations versus the U.S., such as China or any other countries. It is very important to have it in China is in fact too big to ignore, or in fact too relevant to be ignored. It is the second largest economy in the world, a growth engine in the global economy, and also has a substantial exposure in the global key benchmarks. So these two investment cases, in my view, and also at Extracurs, do not conflict with each other. The U.S. critical technologies aligns with the U.S. modernization priorities with minimized geopolitical risk associated with sanctions, trade, and conflict.
How do you guys think about globalization? Globalization was certainly part of my entire career. It was all about the world's getting smaller. And when I was your age on Wall Street, you had to go to Tokyo. That had to be a tour of duty, including you had to go to London, for example. Over the last 4, 5, 6 years, less of that, and maybe even a reverse of that, and onshoring and friendshoring and things like that. How do you guys think about globalization?
Absolutely. I mean, travel-wise, I also continue to love to travel these nations and cities. But when it comes to, I mean, as you rightly mentioned, in the past decades, globalization has been the key terminology to reduce costs, increase supply chain productivity. Nowadays, headlines are always decoupling, tensions, conflicts. And with trade restrictions increasing substantially in the past years, last year it increased 5 times more than versus in 2017. So with this, together with the onshoring and reshoring activities, as example, Apple also indicated its intention to move the iPhone supply chain from China to India. This is making geopolitical risk awareness to investors much higher, and is likely investors would consider geopolitical considerations in their investment portfolios. And Extracurs, our approach